be. Thiagarajan, Managing Director at Bluestar, with us. Mr. Thiagarajan, great to have you on NDTV Profit and to have this conversation. I know you've spoken a fair bit about your quarterly results, etc. But my question is more on the outlook, because it's well known that it was a tough quarter, monsoon, etc., which hurt room air conditioner segment. But are you not expecting this to reverse apart from what you've seen in the festive season, because you have cut your guidance for this segment?
Good morning, Tamana. It's a pleasure interacting with you. First of all, I apologize to you for your Diwali event. I couldn't be there because I had to rush to Delhi.
Sir, that's very sweet of you to apologize formally. You've already done that, and we understand completely. We hope to have you at our next event. Thank you so much.
So it is a bad year on the whole. For the first reason is the summer was a washout, and then you had the interruption. Except for the last 7 days, the GST revision, people postponed it. Now we did see from September 22nd till Diwali the secondary sales happening over 32% in our case. I think industry also did during that period. But having said that, the estimate for H1 is the industry has degrown by around -15%. In case of Bluestar, our estimate is we are at 10% degrowth. Now, the rest of the period, you have only few windows. Number one is between December 15th till New Year, coinciding with the energy label change, there is one window. Post that, everything depends on the onset of summer season, end of February. Now, if you do the calculation of the inventory that is in the market, I think more than 65 days worth of inventory is there in our case. It should be only 45 days in the normal course. Industry, my estimate is it has over 90 days of inventory. In this context, there is going to be sales pressure. If you have to maintain the margins, which are already not so very attractive for this industry, my estimate is that we should be very happy we are matching last year's volume. It is also probable, I have stated that it is negative 10%, could be also a scenario for the full year FY26. At the same time, I'm not worried at all for the simple reason, if you take FY22 to FY26, it will be still more than 19% growth. And if you take FY21, it will be more than 23%, but it was COVID impacted year, one can ignore that. So therefore, this is a bad movie. So intermission had come. So post-intermission, one wonders whether it is going to be a great movie. I am not very sure. If the people go with some satisfaction, it is fine. That's where it is.
Okay, that, as long as you don't want a refund of the ticket. Mr. Thiagarajan, but my question is this only down to how chilly the winter is or how early the summer comes? Because the sense is that this space is also stabilized in that sense. In terms of rising incomes, you have that GST push coming in. Is none of that helping at all? Is that merely the reason, or are you not seeing that kind of push you would have expected from the GST cuts?
The fundamentals are very strong. I'm still maintaining, as you introduced, that 19% CAGR is a given number. It can be even more. So there is absolutely no doubt about that at all. It is just that this is a bad movie or a rain impacted match. It is still wet out there. So you have to wait for the next match. There is no other go.
But let me ask you about that next match then, to take the analogy forward. And very good morning to you, sir. This is Alex. I'm just wondering, so given all of the tailwinds that you anticipate will play out at some point, and to use your reference, the pitch will get better for you from the bowling standpoint, right? So would you say that the next summer will make up for lost ground in this year? And what is the anticipation there?
It should. It should. Going by the history, if you look at it, in fact, even Q4 should be better. But look, we are comparing with a year in which we all had phenomenal growth, right? The last 2024 summer season was 57 to 60% growth. Then again, you had July doing extremely well, around 25% growth. On the whole, the H1 was more than 35% growth. Compared with that, it is bad. That's about all. It's not that it is. That is why, if you look at the CAGR, still it is holding up. So it should come back. There is absolutely no doubt about that at all, because this category is the one on the top of the mind for many homes. It's not only that. We witnessed during that window of September 22nd to Diwali, people upgrading from a three-star buyer buying a five-star, or someone who wanted to buy for only one bedroom trying to buy for two bedrooms. So all that are happening. So it is just that it is a painful and disappointing year, having built up volumes, and that inventory is there out in the market, and you have a energy label change which you have to intelligently cross and manufacture the new energy label products for the next financial year and prepare for the summer. So you have to be patient here. That's about all.
Mr. Thiagarajan, just speaking about the current quarter and the next then, and just to understand the point, you pointed out your inventory levels are lower than industry at 65 days, which is higher than normal for you, but industry is at 95. I'm just wondering if there will be pressure on the pricing front if your peers, for example, or the rest of the industry undertakes discounting in order to bring people to the stores, and whether that will have a negative bearing. If you have to match that, will it worsen the margin profile for you?
I think we have kept that in mind. That's why, while it was always 8 to 8.5% margin for the room air conditioners, operating margins, or the unitary cooling products, we said it is going to be between 7 to 7.5. See, equally, there will be some cost reduction measures that you will cut down on quite a few spends which are variable in nature. So therefore, that is kept in mind. Obviously, right? And with the energy label change that is there will be pressure to liquidate the inventory.
Mr. Thiagarajan, good morning, Neeraj here. Would it be therefore okay to make a hypothesis that calendar year 26 will benefit from renewed demand after 2-3 quarters of a lag, as well as a favorable base effect? So not only Q4 of FY26, but the first couple of quarters or first 2-3 quarters of FY27 as well would be strong?
You are smart, Neeraj. This is what the sales and marketing professionals do. If it is a bad year, the subsequent year number will look great. I would think so. There will be compared with the previous year. Now we are suffering, right? You are comparing with the exceptional year in the history of room air conditioners. Calendar year 2025. So 24 and 25 is looking bad. So 26 should obviously look good.
Yeah, you can call me that, or you can call me a market enthusiast, because markets discount 6 months in advance, Mr. Thiagarajan. So I'm looking forward to FY27 already. But so that was one part. The other part, though, is the reference or the difference between the primary sales and the secondary sales. And I just wonder, when do the sales to the dealers, as the inventory gets cleaned up, start happening? Do they start pre-stocking sometime in December or Jan, or do you reckon that will only happen once the extent or the ferocity of the summer is well discovered in Feb or March?
So it's a function of the working capital, right? That all of them are intelligent. Modern trade or e-commerce or the regional large format players, they do have extraordinary digital systems to monitor this. Showroom-wise sales, what is the inventory, which inventory is moving, which brand is selling more, so on and so forth. In that context, they will will look at stocking up more in end of November to December, anticipating the energy level change, because they will stock up. There will be huge amount of sale that will be happening. Again, they will look at it only from February and March, and that they will wait for the weather forecast to become clear.
Okay, so Mr. Thiagarajan, you know what I'm loving about this conversation is that you rarely have management that is so honest about what's happening. And I think this is refreshing for the street to hear, it's refreshing for us to have this conversation. Having said that, we spoke a lot about room air conditioners. What's happening in the commercial AC and the EMP segment? Because a bit of a lag there in orders as well, and that's not something which is too seasonally affected.
It is not. So there are no worries out there. Commercial air conditioners also was impacted to an extent because of the GST. There are certain segments like government, educational institutions, and marriage halls. These kind of segments do not have a offset benefit of GST. So therefore, they postponed. So that's about it. Now, EMPC can be cyclical in nature. A construction cycle happens, data center, factories, investment will happen, stall, come back, etc. So there is absolutely, that is steady. Fortunately for Bluestar, because we are a B2B and B2C player, we are taken care of. That's why our results look somewhat better in the industry.
So are you expecting Q3, Q4 to have a pickup in this segment as well, Mr. Thiagarajan? What is that pipeline looking like?
Bottom line is, yes, H2 will be better than H1, but I am not very sure it will make up for the, the shortfall in H1. H2 will be always better. There is nothing to worry as of now. I think things are going smoothly.
Mr. Thiagarajan, I just want to check on the debt picture for you, because it's understandable, of course, you're dealing with a little bit of an inventory clearance issue. So in that time frame, what is the debt management philosophy or process going to be for you?
No, we are focused on the ROC as a whole. We are an industry benchmark as far as ROC is concerned. Now, there are two things, right? There is a working capital requirement, which is largely due to room air conditioners inventory. The second part is the CapEx. CapEx for the future, we will continue to invest. R&D as well as the manufacturing capex. That is not going to be stopped because of one bad summer season. So you can be rest assured that the ROC of Bluestar will be upwards of 25%. That is how we will go about. And personally, I do not look at the quarter-ending debt or a cash position. Accounting norms are that. But on the whole, how do you manage? And I think we are doing well there.
I'm wondering what are the other segments that you're looking at, Mr. Thiagarajan. Right now in Delhi, the whole story is about pollution, etc. You are in the air purifier segment, if I'm not mistaken. Are you seeing that firing?
No, Tamanna, it is again a frustrating story for the simple reason it's all every year for 15 days to 30 days. People talk about it, then they forget. And again, the air purifier will help if you are sitting inside a room, which is an air-conditioned room. But people have to move out and do their work. In commercial air conditioning, it is taken care of through the filters in many installations. The fresh air comes in and there are enough filters to take care of that. In room air conditioners, we have always stated that as many filters as possible we incorporate so that use of another gadget is minimized. Now, the whole market size is some 200 crores or so, and it is not going to help. And I don't think for years to come, it is a market which is going to be needle moving. As far as Bluestar is concerned, we maintain this, that we are a strong air conditioning and commercial refrigeration player. Commercial refrigeration should be the next growth story as India grows, both in, food segment, pharmaceutical, and many other applications that should grow. The other program that you are aware is growing our international footprint. Due to tariffs, there is some kind of hiccup, but we have successfully developed products for Europe as well as North America. And I hope that the tariff issue will be resolved before end of this calendar year, and then that should provide growth momentum for our portfolio. That's where we are. And on the product portfolio, we continue to innovate. There are data center applications. We are developing new products. In room air conditioning, again, our philosophy is develop products for all the price points, and we continue to do so. When the product launch happens in February, you will see quite a few innovative room air conditioning products also coming there. And as the market grows, I have stated this, the replacement market is going to be also significant. We will focus on that.
Thiagarajan, we really appreciate the time that you spent with us today, and here's wishing you all the best for the next match that you referred to.
Thank you, Alex.
All right.